Okay, thank you for tuning in to another edition of the Vulcan Report. Alright, this is a special instructional video. I had to make some minor adjustments to the spreadsheet. So this is a walkthrough on some of the minor adjustments that we had to do and how to find everything that you're looking for. Okay, as most of you know who follow the Vulcan Report, I don't always have time to do a video. So what I do in lieu of doing a video is I provide the spreadsheet to you so that you can have timely information. You find this information on my blog at paulscan.blogspot.com. You log in, you just go to the blog, and you'll see today's spreadsheet there, and there's a link to the interactive spreadsheet. It's kept on Google Docs, where you can download the spreadsheet into an Excel format if you desire. You can even download it into a PDF. It's whatever you want, and it's fully interactive, and you can play around with it at your own leisure. Alright, so that's what the spreadsheet's for. The spreadsheet, however, is, I designed it for myself so that I can helps me keep focused and concentrate on the things that I need to concentrate on and find the information I need to find rather quickly. Having everything up in front of me in lieu of looking at a chart, this is all the information that can be garnered from a chart listed on the spreadsheet. So I don't have to have a bunch of charts up. I just need my spreadsheet, and it tells me what I need to do regarding that security. Everything that I could possibly want to know, it tells me. So for those of you who are new to the Black Ops Trading spreadsheet, here it is. Alright, excuse me. For the most part, all of the fields remain the same, just some of them have been moved around a little bit. And I have changed a few things, and we'll go over some of the changes. But in an effort to bring you up-to-the-minute, timely information, this is what I've done. Now, space is limited as far as server capacity and things like that. It's a bunch of different systems and algorithms running, so because I don't charge any money for this, and I take my own time to do this, number one, to benefit me for, in my own personal trading and managing money for my clients, but also, I let you in into my world, so I have to I have a limited capacity in what I can do and how I can do it, so I don't always have time to color code things. I've received a lot of feedback from some of the viewers here, so I'm going to address some of those questions that you guys had. One of the primary questions I get, the first one is, how do you know which one's the best plays to take? And then the second most popular question is, what are the color codes? What is all that? Okay, so we'll start from the beginning. First of all, this spreadsheet consists of many tabs at the bottom. You have your ETF list. This doesn't change. These are the most common ETFs that are traded that I watch. It's not an exhaustive list at all. It's just some of the common ETFs that you'll find that I follow. Then there's a complete listing tab. This is the alphabetical version of the Pulse Wave Daily. Okay, the complete listing is the alphabetical version of the Pulse Wave Daily. So that if I'm looking for a particular company, it's all done in alphabetical order based on the name of the company and the ticker symbol. Okay, all alphabetical. So if I get a question, someone says, what about Cisco? It'll be hard to find on the Pulse Wave Daily because the Pulse Wave Daily sheet is done in a separate format. It's based on signal. So that's how it's organized. Pulse wave signals first, then intraday buy signals, then 2-bar Charlies. That's how it's organized in that fashion. So if I want to quickly find a good pulse wave to take, it's highlighted in yellow. Intraday buy signals are highlighted in green. That's your secondary signal. And your tertiary signal is the 2-bar Charlie, highlighted in blue. So that's what the Pulse Wave Daily is for. Quick find of plays. If you want to find individual securities quick, you go to the complete listing tab. And that's the alphabetical listing of the Pulse Wave Daily. Okay? So quick glance. You just want to find a security real quick, see what the system is saying about it. Bam, here it is right here. Okay? Alright. Hit list is my little personal favorite of the ones that I watch on a daily basis that I trade in and out of constantly. And the hit list consists of stocks, ETFs, and Forex and futures. Okay. All right. Let's go through these tabs real quick. All right. The first column, PWRES is your pulse wave resistance. That's the price at which you're going to buy. That's where you place your buy stop limits. Pulse wave buy is a signal. If it's a 1.00, then that's a positive signal to buy. Okay. So it's very simple. So if you scroll up here, you see highlighted in yellow these here. Like for instance, you see JO, ticker symbol JO. It's the coffee futures ETF. You see there's a 1 here. That's a buy. Here's your buy stop limit, 51.62. Okay, so it's in play at 51.62. It's a pulse wave signal. Your pulse wave signals or your primary signals, they don't come every day, not even every week for that matter. So when they do come, you want to focus on those trades. So you simply place your pulse wave signal at the beginning of the trading day on Monday, and you let it ride all week until it's filled. If it's not filled by the close of Friday, you cancel the ticket, and that's it. Okay, so it's that simple. All right. The next column here is PWBO. That's a positive pulse wave breakout. This is a new column. If you see a 1 in this column, okay, that simply answers the question: what's one of your better signals to take, or which one looks good out of all the pulse waves? If you see a 1 in this column, it simply means that you missed the pulse wave breakout on that security. You just missed it. It happened in the last trading session, and it's giving you a chance to play catch up and catch the continuation. For example, and today you will notice that there is a positive pulse wave in the British pound Forex. Okay. You also notice, if we continue to scroll down here, in Amazon there is a positive pulse wave. Okay, meaning that Amazon just broke out of its prior pulse wave of 157.40. Had you traded that at 157.40, you see now you're going to catch the continuation on an intraday basis at 165.29. Okay, we're expecting the trend to continue, but you must admit that it's quite a nice breakout from the pulse wave. You bought at 157.40, now it's trading at 165. That's a decent profit there. Okay, so that's how that works. All right. The next column is the same, resistance high. That's where you place your buy stop limit on the intraday if you're playing the intraday trades. All right. Then the next column is your resistance buy signal. If it's a 1, then that's telling you that particular security is in play at this price. All right. 2-bar Charlie resistance. That's where you place your buy stop limit on 2-bar Charlie trades. The 2-bar Charlie buy signal is right here beside it, highlighted in light blue. Those are your 2-bar Charlies. The green is your resistance high trades. Okay. Next column is the same, stop and reverse. This is where you put all of your initial stops on all your trades. Okay. If this stop and reverse price is below the 2-bar Charlie, when you're trading a 2-bar Charlie trade, then this is your stop loss. If your stop and reverse price is below your resistance high, then you're going to use this as your stop loss. Conversely, on the pulse wave trades, if this price is below your pulse wave, you use this as your stop and reverse. In the instance where this price is higher than your 2-bar Charlie or your resistance high buy, then you simply use the $2 to $5 rule, meaning that you use a stop loss, initial stop loss of anywhere between $2 to $5. It's just that simple. Okay, based on your risk tolerance and what you have in your account, you're going to use a $2 to $5 stop. It's just that simple. All right. Excuse me. Next column, new column. This is your negative pulse wave breakout. Just like the positive pulse wave breakout, If you get a 1 in the column, it's telling you you just missed the pulse wave, and now here's your chance to get in on this the beginning of the new uptrend. Conversely, the negative pulse wave tells you that the stop and reverse has been triggered. You have a negative pulse wave, a breakout to the downside. That means this shorts are in order. This particular security is now short. All right, that's what that's saying. That's saying that if you had a stop and reverse in there, it's triggered, and you're now short in this market. All right, that's what that means. Okay, this negative pulse wave breakout is telling you this market just broke out to the downside. All right, so in other words, you wouldn't be looking to buy this security today. Okay. The next column, you know what that is. That's your positive swing VIX, and the next column there is your high frequency bot check. Okay, we need to spend some time talking about these real quick. The upgrades have condensed signals into these two columns. Okay, what that means is we now have positive momentum readings built into the positive swing VIX. So even if we don't have a positive swing VIX signal, it will pick up positive momentum in that particular security as well. Likewise, your bot checks column will pick up all negative momentum in a security, not just the negative bot checks, but it picks up all negative momentum in a security, all selling of all kind. I don't care what it is, it's going to pick it up. And also, if a key support area has been penetrated, it's going to tell you that too. So when the security is about to turn, or it's already turned and it's in a bear position, it's going to pick that up. Okay, if there's a 1 in this column, you need to be very careful when you're buying. You better make sure that you have your stop and reverse orders in at your stop and reverse price, because that means that security is ready to turn. It's not saying it's not a guarantee that it will turn, but it is telling you that it is positioned to turn. This is what separates the Vulcan report and the Black Ops Trading from all other systems and newsletter services and stuff like that out there, is that we put you ahead of the market, ahead of the herd. Okay, you know what's happening before everybody else does. Okay, because you have the pulse waves. Everyone else doesn't. All right, so there you have it. Positive momentum, negative momentum. Trend is still the same. If there's a 1 in the trend column, it's bullish. A 0 is a bearish trend. Okay. If the positive swing VIX and the high frequency bots, or let me switch that around. If the high frequency bot check and the trend are both at 0, if they're both 0, that means the market is consolidated. That's where we condensed those signals there. So, for instance, wheat is in a consolidated pattern because the negative bot check and trend are both 0. Alright, that means that the trend is bearish because it's consolidated within the Kumo cloud. You see me do videos explaining that. Okay, so that's what that means. If there's a 1 in both of these columns, you got to look at your trend. For instance, here's one, ticker symbol FAA. The trend is bullish. We have a negative bot check and we have a positive swing VIX reading. What that simply means is that, excuse me, although the trend is bullish and we have bullish momentum as far as the market position in the security, we now are getting sell signals. So we're just waiting for price to confirm the sell signal. In the meantime, you keep buying. Take the intraday buy signals, but be sure to use your stop and reverse. Okay, so that's it. Those are the new upgrades into the spreadsheet. So welcome to Black Ops Trading. For you people who just subscribe to the Vulcan report, you can learn more by watching some of the other videos and by going to postscan.blogspot.com. All right, be encouraged, and remember, take what you can, give nothing back.